Good morning, everybody. This is Todd with the Forex Nitty Gritty Insiders Daily video. Hope you're having a great day today. Hope your week has been well. We have just come through 3 days of really tremendous amount of news that's come out, starting with the FOMC on Wednesday, then the European interest rate news, the pound interest rate news, and then today we had the non-farm payroll and unemployment rate that came out. It was interesting that we had a little bit higher than the forecast for the non-farm employment changes. So the forecast was 100, well, I guess more than a little, 101,000. It came in at a fairly strong amount of 100, and let me get the exact number here for us. Pull it up. So it came in at 163,000. So pretty big difference there. The unemployment rate, though, jumped up from 8.2% to 8.3%. And that is always a concern when that's going higher. So kind of mixed numbers there. And we saw the market react pretty volatile. I mean, it's very difficult to get much going on here. Now, one of the things that I want to look at here is the concept of trading using buy stop orders and sell stop orders. So I've put these two lines on here to kind of illustrate where if we wanted to, we could have put a buy stop and a sell stop, so that if the non-farm payroll, which typically is a fairly volatile news announcement, starts to move up, and this is a 1 minute chart, so it's not a whole lot of pips, but we can see that if we moved up, we would get in, or if it moved down, we'd get in. We'd probably put our stop loss right in the middle here. So if it ran up but didn't really move up strongly, we would short this as, or we'd get stopped out of it with a pretty quick stop here. So this about 7 to 10 pips is probably about what we'd want to be looking at. Now, there are problems with this, but let's kind of go through step by step here. So this is right when it came out, and you're going to see what happened. Now you can see that this dropped down. This would have actually put a short here at 122.37 or something in that range. Ran all the way down to 122.20, so about 15 to 20 pips that this thing dropped. Now, if you were quick, you could have gotten a few pips out of that and been done with it. But on a 1 minute chart, this moves so fast that on our next candle here, it actually ran back to our stop loss and would have gotten us into our long position here. So we got short. If we didn't get out, we'd have gotten stopped out, and then we'd have gotten filled on our long position up here before it came back down and stopped us out. And so we would have ran into some issues here, because we could have gotten stopped out on both sides of things. We could have gone short and got stopped out, and gone long and gotten stopped out. And that's one of the dangers of trading a volatile, moving market, is that things can get really choppy and really volatile fast. Now, as we continue to go forward here, you can see it continued to drop, and then it went back up again, went higher, came back down. And it's interesting that by the time we get things settling down here, we've gone through a move down. Well, initially down, up, and then down, and then all the way up, and then 30 minutes later, we're right back to where we started from. Now it's continued to kind of stay there. Then we've since then really kind of picked a direction and seen it run up, go back, run up, back a little bit, run up, pull back a little bit here. So a nice run up here. Now, if we look at this on the 15-minute chart, it's going to look a little bit different. But this is the announcement time here, and so from the announcement, from the low to the high here, 125 pips. So nice, strong move there. Anytime the market has potential to be volatile, we need to be cautious. We need to be careful that we don't get caught in a situation where we're letting the emotional side of the move drive us in the trade. And so sometimes it's better just to avoid these times altogether and wait for the market to really settle down and give us something to look at. So unemployment rate up, non-farm employment changes up. So mixed market. We don't like to see the unemployment rate get higher, but that is what came out. So with that, we will wrap it up for this weekend. Over this week. Have a great weekend. We'll be back on Monday, and we'll be able to continue to see how this affects the market going forward. So if you have questions about that or anything else, feel free to let me know. If not, we will be back and chat on Monday. So until then, have a great day, and we'll talk to you soon.